Elliott used the word failure to describe a situation in which the fifth does not go beyond the end of third, but Prechter changed it to a less connotative term, truncation, or a truncated fifth. A truncation can usually be verified by noting that the presumed fifth wave contains all the necessary elements of an impulse wave, which are the 5 subwaves. A truncation often occurs following a particularly strong third wave. This happens usually in stock markets, in the equities as such. A too far extended third wave, which usually goes beyond 2.618 of wave 1 and sometimes even 4.236 of wave 1. And then we have a very deep wave 4, sometimes even to 50%, 61.8%, and in some cases even 78.6%. Very rarely, but that also happens. And a wave 4 happens like that. It still does not touch the wave 1 zone. A 0-2 breaks almost the wave 4 part. The 0-2 does not touch the wave 3 part. And after that, the wave 5, which has all the necessary elements of the subwave of an impulse, still is not able to cross the wave 3 high. That happens also because the 4 is deep, third is overextended, far too extended, beyond 2.618, and 4 is deep and can be a very complex corrective as well. So you will not believe that this happened right in front of us on Nifty in 2021-22. Let's look at that example.
Before we move ahead, I'd like to share something with you. History always repeats itself, at least in the stock markets. For those of you who are just starting out as traders, Elliott Waves can be a very valuable tool to predict repeated market patterns. We have created a full-fledged course outlining the basic concepts of Elliott Wave with Mr. Piyush Chaudhary. You will find the link to it in the description box below.
On the daily charts of Nifty, after a very long consolidation in June-July 2021, which you can see as the wave 2 formation in this case on this chart, and this is happening right there. So after that, there was a wave 3 extension. It was a fairly good extension. And after that, there was a wave 4 deep down. It retraced nearly 61.8% of wave 3, yet it did not touch the wave 1 zone, wave 1, wave 2 territory, that is. And after that, we have had a wave 5, which topped out at around 18,350 or something in January 2022. As you can see, it did not go above the wave 3 zone, wave 3 high. And after that, what happened, you are aware. From about 18,300 something, there was a crash till 15,000. So yes, such are the after effects of a truncated fifth. So we have understood about truncated fifth. We have also seen, we'll also understand that similarly the diagonal patterns and the fifth extensions, they all lead to one major part, that there's a dramatic reversal is ahead. So let's just look into that zone as well. Until now, we have covered the formations of which are the normal forms of impulse waves. Now let's look at the other forms of motive waves, the diagonals. A diagonal is a motive pattern, yet not an impulse, as it has some corrective characteristics. Just like an impulse, no reactionary subwave fully retraces the preceding actionary wave, but the third wave is never the shortest, but the fourth almost always overlaps the wave 1 territory, and that segregates the larger part of impulse and diagonals under the same umbrella of motives. There are two forms of diagonals, leading and ending. While a leading diagonal has impulsive characteristics of 53535, an ending diagonal is far more difficult to decipher because it is all 3 3s, 3 3s, 3s. Now that is very confusing and can be similar to a triangle, but you'll understand that 3 is not the shortest, and that is where the larger segregation happens. Between the leading and the ending diagonal, let's look at the ending diagonal first. An ending diagonal occurs primarily in the fifth wave position, at times when the preceding move has gone too far, too fast, as the Elliott himself put it. A very small percentage of diagonals appear in the wave C position of ABC formations in doubles or triple threes, but that is very rare. In most cases, it will be the ending part of a very large impulse. In almost all the cases, they are found at the termination, that is the end points of the larger patterns, indicating exhaustion of the larger movement. A contracting diagonal, which you can see in the figure, takes the wedge shape within two converging lines, which was pretty much the classical formation of a wedge. This most common form for an ending diagonal is illustrated in the figure as shown in this typical position within its larger impulse wave. A rising ending diagonal is usually followed by sharp decline, retracing it back to the level where it began and typically much further. A falling ending diagonal, by the same token, usually gives rise to an upward thrust. Now, fifth wave extensions, commonality between fifth wave extensions, truncated fifths, and ending diagonals all imply the same thing, that there's a dramatic reversal ahead. I want to show you one example of an ending diagonal. Until now, you may not be understanding what can be the after effects of an ending diagonal. But the ending diagonal, just like the previous truncated fifth formation that we had witnessed, ending diagonal also happened right in front of us on Dow Jones Index, the world's leading index, and that too on the daily time frame, daily chart time frame. As you can see on the chart, it almost took the entire of 2021 to form an ending diagonal. All the subwaves are three waves. 3 is not the shortest. 4 overlapped wave 1 comprehensively. It pretty much retraced 78.6% of 3. Everything is 3, 3s, 3, 3s, 3s. And after that, it made a wave 5 top. Now, this top was formed in January of 2022. What happened after ending diagonal? Did the dramatic reversal happen? Let's see this thing. Yes. After that, from a level of 36,000, Dow Jones corrected to 30,000, a fairly nearly a 20% correction, which even as a thumb rule is a fairly large correction. So for a flagship index, so yes, the dramatic reversal did happen, and as you can see, it also went below the starting point of an ending diagonal. So all the criteria happened. Now these are the guidelines of retracement, which happen on that it happens below the starting point and that it happens far lower. These are the guidelines, but the rules are that it retraces almost the entire part of it. At this point, let's look at leading diagonal as well. A leading diagonal, as we have discussed, they are 5, 3, 5, 3, 5, is the one typically happens in the wave 1 position of a 1 larger degree. And after a leading diagonal, usually a deep 61.8% retracement also happens. The commonality between a leading diagonal and an ending one is just that the 4 overlaps 2. That's it. But a leading diagonal otherwise has an impulsive characteristic. So the wave 1, 3 and 5 are all impulse waves as subwaves, and waves 2 and 4 are corrective waves. Barring that, and the 0, 2 also does not touch 3. So that is the commonality between impulse. So there's a middle ground between an impulse and an ending diagonal, which is the leading diagonal. And the leading diagonal, that's why it's a little difficult to also decipher because of that. So, but the one important part is that why is it called a leading diagonal? Because when a leading diagonal happens, it is usually the wave 1 of a 1 larger degree. So after that, when a 61.8% retracement happens, thereafter the larger wave 3 is also waiting for. So which is the larger wave 1 as a trader is waiting to play for. A leading diagonal happened in one of the most primary stocks, one of the largest of large caps, one of the darlings of Indian stock market, ITC, right in front of us. As it happened from the 2020 lows, as you can see on the chart, it happened very clearly, and you can see that after the leading diagonal, or maybe you can see within the leading diagonal, the 4 has entered the wave 1 zone, the 0, 2 did not touch 3, and we have a clear impulse waves as wave 1s, 3s and 5s are all impulse waves. So it's all meeting with all the rules. And after the leading diagonals, it did not retrace very deep, but it went through a lot of sideways retracement. And during this period, a lot of jokes and memes were floating on social media, on ITC, and people were mocking the stock without realizing that a wave 3 was waiting for. And after that, you can pretty much go back and check the history, what has happened. The stock has nearly doubled. So a leading diagonal is a leading indicator of a leading wave 3 happening. So take this as a leading warning that a wave 3 is waiting when a leading diagonal happens. It's not a corrective, it's the wave 1 of a larger impulse wave. Until now, we were dealing with the far easier concept of impulse waves and diagonals, which are broadly motive waves and are relatively easy. Now we come to the more difficult part of it, the corrective waves. And let me warn you in advance that correctives are not easy. This is where most people lose their ground. It's a quagmire out there. Markets move against a trend with immense struggle. The haphazard accumulations and distributions, the conflicts of pulls and push result in erratic movements. The complex myriad of human psychology and social behavior generates varying kinds of market structures. This tug of war between the two opposite factions generally makes corrective waves less clearly identifiable than motive waves. And motive waves generally flow with a lot of ease in the direction of the one larger trend. As a result of this conflict between trends, corrective waves are quite a bit more varied and have a far more different structures. Further, they occasionally increase or decrease in complexity as well. So a simple zigzag becomes a double zigzag, sometimes becomes a triple zigzag. A simple flat becomes a double three and sometimes a triple three as well. So there are a lot more variations, there are a lot more formations. As the terminations of corrective waves are less predictable than those for motive waves, you will have to exercise a lot of patience and flexibility in your analysis when the market is going through a lot of corrective mode, because otherwise you'll end up making wrong projections. And the prices are in a persistent motive trend. If the prices are in a persistent motive trend, it's very easy. But when the prices are in a corrective trend, you'll have to exercise a lot of patience. It's only usually clear after the correctives are over that you'll be able to understand what pattern it has formed. So go slow when it comes to the corrective waves. Now, corrective waves come in two styles. There are sharp corrections, which are angled steeply against the larger trend, and then there are sideways corrections. While always producing a net retracement of preceding wave, typically contain a movement that carries back to or beyond its starting level, thus producing an overall sideways appearance. Specific corrective patterns fall into three main categories. There are zigzags. Now, zigzags in the form of impulse waves have the commonality between 535, but there is a slight difference which we'll go through. Zigzags can be singles, doubles, and triple zigzags as well. Then there are flats, which are 335 in nature. Flats can be a regular flat, an expanded flat, and a running flat. But flats are usually sideways in movements. But then comes triangles, which are pretty much the most difficult because they go so much sideways, and they are all threes. They are also very difficult to trade actually. So triangles come in three different formations: contracting, expanding, and running. Let's go through all of them one by one. Now let's come to the more specific forms of all three correctives that we have discussed. To begin with, let's start with zigzag. Zigzag, just as I had mentioned, that they are sharp corrections, very sharp corrections. And in fact, if you go back in history, even 2020 or 2008, they were all sharp corrections, possibly zigzags. A zigzag is a three-wave pattern with its subwaves 535 and are labeled ABC. Now here comes the most important part, the rules. The waves A and C are impulse waves. B should retrace minimum 1%, but no more than 61.8 of A. If B is a triangle, the termination point of the triangle must not be deeper than 61.8 of A. C must cross above A, even if slightly beyond A. Occasionally, zigzags will occur twice or at most three times in succession, segregated by an X wave. X wave can have a nature of any corrective wave. It can be a flat, it can be a zigzag by itself. And these larger formations can become double zigzags or a triple zigzags. Let's look at a couple of examples of zigzags. First example is of Axis Bank. As you can see, wave A and C both are impulse waves. B did not retrace 61.8 of A, and after that C has gone below A and it has completed the zigzag formation. The second formation that I want to discuss is on zinc. Even in commodities it forms. Practically Elliott waves are time agnostic, also instrument agnostic, which means they work on almost all the time frames, not almost, all the time frames and all the instruments. So now this one is on zinc. Again, B did not retrace beyond 61.8. C went beyond uh, A's low. In some cases, just as a guidance, just as a guideline, C can be sometimes 0.618 to 0.786 of A. It can sometimes extend to 1.272 of A. And in a very rare case, something like a 2020 sharp correction or a 2008 sharp correction, it can even extend to 1.618 or even 2.618 of A. But these are guidelines. So the normal rule is that it can only go beyond the wave A, high or low in this case. While zigzags are sharp corrections, flats are more sideways corrections. And flats have an inherent structure of 3-3-5. Flats also come in varied forms, so flats are a little more difficult sometimes to deal with. Let's understand the kind of flats that are there. There are more sideways correction. The structure, as we had discussed, are 3-3-5 and are labeled ABC. But let's look at the rules. B must retrace more than 61.8. That is the one major segregation between a zigzag and a flat. But B is not easy. B can go even below, B can be even larger than A and can retrace A by 123.6 to 138.2 of A, and in some cases even more. C must be a minimum of 38.2 of A, though it can go beyond 100 to 138.2 of B in normal circumstances, and even 161.8 to 261.8 of A under extreme circumstances. But then there are two other important segregations. If B is greater than A, yet C is greater than B, then it's an expanded flat. But if B is greater than A and C is smaller than B, then it's a running flat. So these are very important formations. Let's look at all the three examples on our live markets. This is a regular flat that happened on Nifty. It's a very clear formation. As you can see, the A had an ABC formation, B was a sharp corrective, and C had an impulse formation. This was a regular flat. In the case of an expanded flat, we have Maruti Suzuki formation. B was larger than A. Now, inherent structure of A and B are all ABC. They are three threes. And C was an impulse in both the cases of Nifty as well as Maruti. This is an expanded flat where B was larger than A, yet C was larger than B also. This is an expanded flat. But the most difficult part of trading flats comes from the fact that you cannot pick the lows of Bs. In the initial part of my career, I used to try and pick the wave B's lows to try to catch a wave C impulse to trade. But I practically, after a few years of experience, I understood that it's practically very difficult because wave B can extend much more, and sometimes wave C does not necessarily come to even the entry price, which is an example of running flat. In the case of running flat, wave B can go beyond the wave A low. Though C is an impulse, it does not necessarily cross the A high in this case and goes very short of A. The minimum requirement is 38.2 of A, which it has completed, but does not go beyond A's high. So as a trader, it becomes also very difficult to trade a wave C, though it is an impulse. So a larger flat pattern trading becomes very difficult in such cases. So this is an example of running flat, which we have seen on Nifty itself. If zigzags and the flats were not enough for you, let me bring to you triangles. The triangles are very difficult to decipher to begin with. They are also in very different formations. So, but if you follow the rules, triangles will not be as difficult as they may appear. A triangle appears to reflect a balance of forces, causing a sideways movement that is usually associated with decreasing volume and volatility in the markets. The triangle pattern contains 5 overlapping waves that subdivide threes and are labeled A, B, C, D, E. The structure of triangles is all 3 waves. Triangles can be contracting, expanding, or running. and they all have slightly different variations of rules. Let's look at the contracting triangles first. Now, in the case of contracting triangles, either wave A or B would be the longest wave. All subsequent waves C, D, and E must be smaller than the previous waves. And each wave in a triangle must be at least 38.2% of the previous wave, except E. E can be even slightly, even slight of D wave. In rare cases, one of the subwaves is itself a triangle, which is usually the wave E, which also happened in the past in several cases. The trend line is more of a guideline rule, which is AC and BD move in opposite direction and are pointing to the same point, intersection point. They are usually converging. In the classical pattern format, it was called a symmetrical triangle. And now it is in the Elliott wave format, it is called a contracting triangle. Usually the termination of a triangle is considered when the BD trend line is crossed by the price. After the completion of E, it crosses above the BD trend line, and that is where the termination of a triangle is understood to be done. Sometimes even that there's a whipsaw, because if E is a triangle, then the trend line is crossed, but the high of D, the termination point, the beginning point of D is not crossed. So in that case, we usually think that the D should also be crossed as a termination point, as a final termination point should be done. We'll look at one of the most iconic examples in case of contracting triangles, although there have been several contracting triangles in the last 1-2 years. This contracting triangle on Reliance is pretty much one of the most discussed in Indian stock market history. It happened from the 2008 highs, took nearly 7 years to form. Reliance was almost always the darling of Indian stock market, and after some 2011-12, it started losing its touch. The stock was not moving anywhere. It took a very long time to form wave D and E. So after that, it's a nearly 7-year formation. It was not an easy formation to stick to even as an investor. Forget the traders who were pretty much trading the stock daily. So as you can see, this was pretty much the most iconic formation of a contracting triangle. And it has been till date, it has been discussed a lot. Now let's talk about expanding triangles. Expanding triangles by their very nature are completely opposite of contracting triangles. In this case, waves A are pretty much the shortest, wave A or B would be the shortest, would be the smallest, and subsequent waves C, D, and E are longer than the previous waves, and where E is pretty much the longest. Let's look at one of the most prominent examples from our own stock market, Bharti Airtel. So as you can see, most part of 2021 and 2022, it took to form a very large expanding triangle where A was the shortest, B was much longer than A, C was again longer than B, and D was pretty much the same length as C, and E was even the longest. So as you can see that this was an expanding triangle formation. In history, there have been several expanding triangle formations on much larger time frames, even on the small cap indexes of the US Hang Seng index. So you can see that expanding triangle also has a very wide applicability. Now let's look at the last form of triangle, which is the running triangle. And sometimes that is very difficult to decipher because it also has a trending appearance. It has a higher high, higher low formation. You might have read the Dow theory by now, so which has a higher high, higher low, or a lower low, lower high formation. A running triangle has that much in similarity with the Dow theory, but yet it's a triangle. From the trend lines guidelines point of view, they go in the same direction, either upwards or downwards. And all subsequent waves are longer than the previous waves, with wave E being the longest. And that is the commonality with the expanding triangle. Yet the difference between expanding and running is the higher high, higher low, or the lower low and the lower high formation. Let's look at one of the examples on crude oil. It took almost the entire year to form. Now this you can see as an example. The entire 2021 crude oil took to form. This is the MCX chart. The similar chart formed on Brent and WTI as well. It's a running triangle, and A, B, C, D, E, you can see all of them are wave threes by their inherent nature, by their subwaves. And after the E, there was a blast upwards. So a common trait after a triangle is a strong impulse wave usually happens after the triangle is done with, which happened again on the crude oil as well.